Run it. I can't take no loss. I don't even know what it costs.
Hi, and welcome back to the Conscious Day Trader. Today we're going to have, it's quite a good day because we're going to have two videos that are going to be posted, one at 4 p.m. my time, and the next one, which is going to be this one, is going to be posted later. The reason was because I had to trade, I traded yesterday sort of lunchtime, and I was done for the day, but actually making the video, then we got into a second live trade, which is, if you want to see a live trade, go and watch the previous video. A lot of people are interested in seeing me live trade, so this is the first time that happened, and it gave me a little bit of a taster of how it would be to do live streams, which I know it's one of the biggest requests, and I have explained why I am a bit reluctant to jump onto that boat because of the fear of people just jumping into trades that I'll be trading. That being said, today we had another good day. It was a very it was a simple day. It was an Asian session trade on the pound dollar, and the reason was because what we normally see in the open, we had a really nice extension above the previous daily high on the pound dollar, and it hit a really key Fibonacci level, which we were discussing in previous videos, but it was a no-brainer, and we had that target of 125 that we have been discussing being hit. So there were so many reasons to be short, and I took the trade this morning, and it was quite an easy. The market doesn't move as quick as the London session, but you can just put them in, put the trades in, and by the time of lunchtime, I was done. I closed the trades for 400, and let's see. So there we go, $451. This trade here, trading that short down to these levels. We didn't go that far because we didn't have to. We were only looking for roughly 20 pips on each position on a one lot size, and we did have 2 repositions and 3 actual trades, and we're going to see that when I'm going to show you on the charts on TradingView. So 451, we're doing really well. We just took out the 5k for the month of profits, and we also can see that target of 210,000 is getting closer and closer. We're 3,000 away from getting a $250,000 funded account. So we're looking forward to that when it happens, and we're going to celebrate it together. Talking about celebrations, if you are new to the channel, make sure you subscribe to the channel, because if we hit 5,000 subscribers, we're going to open a Discord community, which is really exciting. I have been part of the Scruffy Squad in the Discord, and I'm planning to stay in that as well. But this will be more focused on the ICT side and my own trading. So if you want to be discussing things around ICT and all the stuff that you see on the channel, I know it's been a huge request to either have a Discord. I was thinking maybe Facebook, but a lot of people killed that idea quickly. So it looks like Discord, but we are going to put a poll to be democratic and ask everyone what they would rather create, because this is for you, and hopefully we'll hit that 5,000k soon, so then we can do that as a reward to the community that have been following. Before we get in, make sure you like the video as well, because that will share the video. It will push the video in the algorithm, and a lot of people will see it. And that way more people can subscribe, and quicker we can create the community. A little secret, I just literally had a sneak peek on how to start the server. So that's can be quite an exciting journey. But just tipping the toes into the water and see if we get there. Right, so what was the trade today? It's and we're going to do the same thing. I have closed all my positions currently, but I am seeing a bit of a movement that potentially we may want to re-enter. So stay in the video, because normally that happens towards the end. Definitely will happen towards the end of this video, as I'm seeing the setup now, potentially for a live trade. So let's jump back onto TradingView. Okay, and here we are. This is what we've been talking about. Now, it was quite a clear and quite a straightforward trade today, and the reason is because all the analysis that we did on the pound dollar came into play this morning, and I opened the charts out of chance because normally you know that I will be trading around 2:30 London Open, but let's open the charts and see what would happen. Would we find a entry around the Asian market, and it literally just in plain sight, a perfect setup which we took. So let's take the replay, and we're going to change the time zone to go to Singapore, because that is +8 is my time zone, and we're going to go to the replay and go in the morning. So we're going to look at 7 o'clock, this open here. Now when I saw this, and hopefully you now are starting to see this and you're like, yeah, that is a great opportunity. Why? Because look at this fib. So we had the highest pip point there and the lowest, and this is where price has been respected. You can see we failed to break these lows here, right? And we looked at that monthly, that potential target on the lower side. We pushed up, came back down, failed to break the lows, and this is on the 1 hour. Then we pushed up, filled this fair value gap here, really nice fill, all the way delivery to the 61.8. That's one part of, remember that we talked about that book. That's one page of the story. So we're back into the 61.8. So we had delivery of price, retracement of that move, and we also had a push to the downside when it got retested, came down, but again failed to break the lows. So we've got a failed to break here, a failed to break here, and a failed to break here. So we had, if you're liking trend lines, you can grab one of these and you can go from that point there all the way to this one. You can see that we've got higher lows, higher lows, higher lows. So I'm not a big fan of trend lines, but in cases like this is quite useful. How would I mark this to see the higher lows? I would want to see these boxes that you're used to me seeing, and it's obviously from the ICT 2022. These areas here, which are going to be what? They're going to be sell side liquidity to be tapped into. All these areas. So let's go and put that in. Sell side liquidity there, sell side liquidity there, and sell side liquidity there. So pretty much this area here is quite a nice target. Then I would look to the right side and we can see any big round numbers that can be a target. Obviously we know that 1,300 around the 50% retracement of a bigger on a monthly chart. And if we go on the monthly, you can see why that is there, because we had that enormous drop, came back up to and broke above the 50%, pushing into the 61 retracement. So we have that on the monthly level, so we can still see that we're currently trading above that 50%, pushing up, even though today we traded short. And we're going to see that why that setup looked really nice. So we have this fib that we pulled in, so we came up to 61, higher, 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 sell side liquidity never got tapped into. Yesterday's trade where we had this push up and it filled, we traded this, filled down into a fair value gap there and created the previous daily low and pushed all the way up, took out the liquidity, buy side liquidity of these areas here, filled fair value gaps on your left side, and it came close to the 76.4. Why is the 76.4 important? The 76.4 in Fibonacci terms is a full completion of a reversal. Now there's a full price reversal, which will be reversing to the original price, so 100% reversal. And there's also reversal to the 76.4, which normally you have a reaction to the price. So what we wanted to do is get an idea of how the price is going to react at that level. So we're looking for that 76.4 to be breached. So the plan here would be, obviously we know from the ICT 2022 mentorship, and if you're new to this, go and check it out. It's all free membership and mentorship on YouTube, and it's all free. You can find all 42 videos on that, and it will explain everything about what you're seeing on this chart, like buy side liquidity, sell side liquidity. It even talks about Fibonacci, but instead of using Fibonacci retracement percentages, he uses standard deviation. So one standard deviation and how far away is the price going to move. That will be 2 standard deviations and so on, or 1.5. And that also gets respected quite often. Because if you think about it, a standard deviation means that it's going to move as much as this move has moved. Once the standard deviation away will be a full price extension. So that makes sense that the price can repeat previous daily movements. So what we're going to see here, the price breaking above the highs. Now, as soon as I opened the chart, I was very interested in this, and we're going to see what happened if we go on the 15-minute. We're now at 6:45, and I traded this on literally the highest point. Now, why did I not wait for an ICT confirmation entry, which I did for my second entry of the trade? Because I wanted the price, one, to break the 76.4, and we can see that there, and it had that wick move all the way up and then strong push to the downside. So my entry, if we go back to the price, so my price was 125.0045. So as you can see, I literally was able to pick up the top. Why was I confident that this is going to be a reaction? Is because this is another retest on the round number of 125, and that was, I generally wanted to get involved at this price. I knew I would be involved, and normally if I'm not sure, I'm waiting for confirmation. The other thing that gave me confidence that this is going to be happening is from the, if we go back to the 4 hour, we have this move, and now we've got fulfillment of all these fair value gaps. And this was the last fair value gap on the 76.4 that got filled. There were so many confluences that we were very interested in pushing the chart to the downside. So let's zoom back into the 15-minute. And now we see we're entered there. I believe we entered on this drop as well, but that was my first position. And you can see here on the MT5, the repositioning happened at 124.947. As you can see here on the chart, those are my first entries, and that was my reposition above the 1.25. I was quite confident that the price will be breaking back on the downside. So it was quite a close reposition. So we're talking about 10 pips, 9 to 10 pips, with the risk of if you want to see risk, what we were planning for was these highs to be taken out. How far would I have to wait for this? 40 and 50 pips. In terms of one lot size, that would be $400 to $500. So I had to be careful in terms of, because if I got in here, I wouldn't be able to trade another reposition until it breaks these highs here and highs here. So I had to break down I analyzed it carefully. I was super confident in this idea that there's going to be a reaction on the 125 to the downside, and that was the plan. And as we can see, we got repositioned after this candle. So we left the top two trades and we closed these two trades for like $5 and $3 just to pay the commissions of the trade. And then if we move forward, we had the delivery of the 20 pips. So from that position there, we looked for 20 pips. It was slightly less, I think. I believe I took it out a bit early, so I was at 380 or 368 at that point. And then I was waiting for the price to come back up to fill this fair value gap for a second entry. So I closed those positions, and obviously when you're down here, you're thinking, okay, is it going to fill this fair value gap and then it's going to push back into this, which it actually did. But if you're looking at this from a long perspective, you might be thinking this fair value might get triggered all the way to break back up into the 125. So that can be scary. But I was quite confident in that we'll be breaking below the previous daily highs. And it did there. And my second entry was when it touched that fair value gap there. So if I go on to the trade, this $88, we entered at 124.904. So 904, that is exactly on the fair value gap. If we, I believe I was looking at this at a lower time frame, and you can see that fair value gap there just got tapped in on that wick there. That would be the entry, just so you don't get confused. And then it came back, retested the fair value gap. I could potentially enter a second position there, but I was already paid, so I wasn't super keen to have a big size after that. And then we see the continuation of the price down, and that price delivered. I only took 8 pips on that. I was looking for 10 pips, so I closed below these swing lows here. I could have held for the break of these lows, but let's see if it did deliver that price. No, so it stopped. And also we were going into the London kill zone. So it stopped on the delivery of 16 pips, so 17 pips. So still, I wouldn't be taking another 20 pip move. You have to remember that we already moved down. And yes, if you're repositioning this to trade down into towards the equilibrium, you could be anticipating those big moves, but I am always looking for that 20 pip moves, and it delivered that pretty much twice in this section here. Now, why am I looking at the other chart is because I'm also looking to see if there's any opportunities for a trade now, because what happened next, there you go. We had that huge breakdown. I should have targeted a bit lower, but I am still happy, made like nearly $500,000 on this. So 35 pip delivery, so you had a 20 pip to there, 20 pip there, came back up. You could have got into the fair value. Even if you got in late, you would still get another 35 pip move. That's why ICT entries are so powerful. And now we're in this range here. So let's see what we're looking for here. We had the Judas move for the London kill zone, and then that came up to fill that fair value gap there, and now push down. The next obvious target will be equilibrium, right? So if you're looking to go long in this area, that would be your first kind of valid opportunity to look at the chart for a position to the upper side. Why? Because this is so heavy. There's no indication at the moment that you can be pushing upwards, but it doesn't mean that it can't go up. We're just looking at the price action and seeing we had a break of the high, a failed to break above the 125, and a delivery down towards equilibrium. We're filling these fair value gaps. Look where it stopped, exactly on a fair value gap. So if we take that and use the command key to get the magnet, bring it across, that fair value gap has been filled. Let's relabel that into we are on the 15-minute fair value gap. It's turning to be my favorite kind of time frame these days. And then that's the last time frame. So if you were going long from this fair value gap upwards, that would have delivered 14 pips. So you can see how you can, with ICT, if you're looking for 10 pips, it's very easy to find opportunities to trade it. Now, what am I looking for in this current moment? I am convinced it might not happen because we've always had this delivery. I mean, this delivery here has been a beautiful delivery of 50 pips. So 50 pips, if I had 2 positions on that, that would be in $1,000. But if and whatever, that doesn't make any sense because obviously I closed the trades and there's no point looking at what you could have had if you had left the trade, because it's the same way what could I have had if that had gone against me and I didn't take my profits. And that's why when you look at your trading, don't look at the future of what your trading did, because there's no point in that. You're just giving yourself false information and information that you didn't react to into the moment of the trade. Right, so I was hoping for this price to come a bit higher up for me to be interested again to reshort this opportunity. Now, this can very easily go down towards equilibrium and the previous daily high. If that happens and it breaks all the way down to previous daily lows, then we might be interested in a long position. We'll see how that plays out. We are in probably one of the days that the price distributes. So we had a big volatile Monday with a continuous push to the upper side. We did find an opportunity to short the market, and now we had another push even higher during the Asian market, and then it's crashing down into that fair value gap pushed on the higher time frames. If we go down to the 5s, you can see a little fair value gap there, and that will probably be more obvious on the 2 minutes. So all this area here, and what we can do is take this. So here's a question: can you go short on that fair value gap there? So what we've had, that push down created the double top here. Now the price can very easily, that would be a nice target to start thinking of getting short. But the question is, can you go short here? Let's think about it. If you're looking for 5 pips, that can deliver 22 pips to equilibrium. Now for me, that I'm looking for 20 pips, that doesn't make sense for me to take a trade here. Why? Because I would have to be right in the full move. I'm not looking at a part of the profits of that move. I'm looking for a full delivery down. So the risk is a bit high, because what happens if that move is completed and then it's going all the way to the top? I have to deal with the heat of a position from here to the tops of that, another 40 roughly pips, $400, which is my daily profit. There's no point for me to risk any further. So what am I thinking here? My thought process is, I want to see this push all the way up, fill these fair value gaps. There will be a reaction, obviously, and potentially people can make 10 pips on that, or 20 pips if they do. I want to see that come back up to this area. Why? Because this fair value gap hasn't been filled yet. We have a double top here, and we'll be in a premium area. So that means that the price is overpriced, and will be it will want to rebalance itself. Now if we're up here, the other thing that I'll be thinking, is it a potential another retest to the 125? So if I entered here, I would anticipate the price to come and retest this area, so I wouldn't be so eager to build a position so close to that area of attraction. The 125 is going to stay important until it's either broken clearly and it's showing areas interest to go higher. Until that happens, it's going to be resistance, and we've seen that. We saw that here. If you go to the 4 hours, you can see 2 4 hours closes below the 125, even on the hours below the 125. We haven't had a close above that area, and that's telling me that there's a lot of interest to not let the price go higher at that price. Well, there's a lot of selling, a lot of sellers in terms of algorithmic sellers not letting the price push higher. Now if that runs out, that will be your next target, and that will be a full reversal of the Fibonacci retracement, and that will be quite interesting to see. Right, so we've got heavy red day, and we picked up the top, pushed it down. Now, as we predicted, there's a bit of a stall point on that fair value gap there, and we can see this if we go on to, this is live data now. We are on the 25th of April, 4 o'clock Singapore time. So let's go back to the London time. So we're on the 9 o'clock candle. So we're going to see that reaction for the fair value gap live. Now let's see how aggressive this is going to be, because this is quite interesting. We're going to stay a little bit on this recording, and I know you like these. So we're going to look if the price is going to go here. What do we have in the way that can stop the price from going here? Is these highs and these highs, but obviously that is the target. So I would be looking for the price to come right there, to tap that and then continue lower. Then if it doesn't do that, my big obviously sometimes this fair value, it's always good to label them because it looks like there's no fair value gap there. But if you go on the 15 minute, where do we do it? 5 minutes or 2 minutes. So this was the area that we're looking for. So we had a fair value. I would put this fair value on the 3 minute because it's one of the most obvious. If you're not sure which time frame to go, you can just start from the 5 and go downwards to the lower time frames. And here we go. So we had push down, equal lows here, which we know that it's an attraction for the price to go and sweep because we've got sell side liquidity there. So let's go sell side liquidity there. So now we're waiting for that price to tap into here. Let's see if we're going to be interested. 15, 17 pips. I will definitely won't be taking that trade, but potentially for someone who wants to see that continue down to this sell side liquidity, that might be a nice opportunity for entry. But as always, guys, with this channel, make sure you're using this as education and not as a signal service. I'm not offering any signals. So anything that you see here is for education and for entertainment. And we see that rejection there now. Let's see if that price is going to come to this area or to this fair value gap before it delivers price. From the red candles, you can see a heavy red start to the pound dollar, and we can see that from there pushing down from the Asian market. The Asian high came back, London kill zone open, retest the fair value gap, pushed down, stopped exactly on the fair value gap, and now it's rebuilding liquidity. So we're going to see how it's going to react around that area. I'm going to probably stop the recording and wait for a bit to see if we have that reaction, and I'll come back into it if I have a live trade. If not, if we don't see something good, you will know because I haven't recorded anything further than this. But overall, if we look at the price, at the profits that we made, $451. $450 is a good day for me. We made 560, so we're on average above $500, half a grand a day. So we're on target to have a good month, and we're going to continue looking for the same setups, because when you have something that's working, don't change it. And that's where you're going to see your consistency. And yes, we're still running on all green days since January 1st. We're currently on the 25th. So that will be 4 months if we continue with the next 5 days to make that the green days. Super happy with the results, but also super happy for the green days. And it's just, this is for you guys to also understand that the risk management and what you're being taught by the online educators of, you know, you need to be risking, you need to be having a win rate of 20 to 30%. That might work for someone. Potentially that might be the detriment of all the rest of the people. Same like me. I might be getting green days because of how I'm managing the trade and my fixed stop loss around 2,000 to 2,500, which I'm basing it on a weekly performance, which we haven't had a red week since January 1st, or a red day even. So for me, it makes sense for me to give me that extra freedom to base my trades around 2,500 on a 210,000 account, which my drawdown is roughly around 14 to 15k. So it makes sense for me to be able to risk a little bit, to be able to put some money in each trade on my every day, because my consistency is proving me that I can do so. And that's what you need to do. Build the confidence, build your way of trading. You don't have to follow me, and you don't have to do exactly what I'm doing, or anyone, even if you're following Scruffy, ICT, Tom Hoggard, or whoever you're following. Make sure you're only following each YouTuber or whoever's sharing the knowledge just to improve your style of trading, and you're not trying to copy their way of trading. You're trying to understand, why is Yanis trading like this? Why is the conscious day trader waiting for breaks of the previous daily high to go short, which is learned from ICT? But actually, why is he managing the trade differently? ICT trades with very tight stops, and that works for him because he can be extremely accurate. He can be extremely accurate with his entries. He can have a 3 pip. If it takes him out, he can re-enter, and then he can let it run for 100 and 150 pips. So for him, it makes sense. For me, it doesn't make sense because I am not that style of trader. But everything else that we look at from ICT 2022 makes absolutely sense. Fair values gaps, absolute sense. And that's what's been paying me every single month. We've retracted, I believe now, 17,000 from the fivers percenters as profits. So when we hit 100k, profits retrieved from them, we will do another maybe potential interview, and I will discuss a little bit to the community that don't know this channel about how I got there. And that's what you need to do, guys. You have to bring reality into your reality if you want. You can't make 10,000 a month if you don't think it and you don't believe you can do it. And there's a difference. Someone who has the will to do it, he will seek the information to make it happen. If you doubt yourself that you will never do it, you're putting yourself in a position of weakness and you're limiting how far you can go with your trading. So make sure you don't limit that. Sit down with your partner, sit down with yourself, with your cat, with your dog, whoever you need. Sit down and write down, what is your goal? Why are you doing this? Because you're not doing it for a hobby, and you're not spending hours and hours and hours after work. If you're at 10 o'clock at night looking at charts to make £20, you're not doing it just to make £20. You're doing it for your financial freedom. You're doing it to be able to do what you love. And it might be spending time with family and having the freedom to do whatever you want. So on that note, write in the comments, what is your target? Is it 5K? Is it replacing your job that might be making 2,000 or 3,000? Write it down, make it real. And don't aim for the stars, aim for the moon, and one day you'll land on the stars. As a famous saying, I don't know who actually said that, but it makes sense to me. The higher you aim, there's higher chances that you'll get closer to it. All right, so there's a little bit of psychology tips towards the end. As you know, is for the people actually who stay longer, get the best information and the live trades. I've dragged it along long enough to see if we have any trades. It looks like it's pushing. Let's go back onto the chart, pushing down. So if we drag on to our good old trading view, we'll be waiting to see. We see like a price squeezing now. It's starting to, the candles are becoming smaller and smaller. So there's anticipation of a big move coming. Could this be it? Or is this a rejection of these lows to come and fill that fair value gap? That's what I'm thinking at the current moment, and that's what I will be waiting for. If we take the ghost feed from this position, we're looking at that, and then that, potentially. If that doesn't happen, we're also looking for that to there. These are the two things that my mind is actually thinking right now. Obviously, we have equilibrium, which is also a draw of the price. So if it breaks down sell side liquidity, it's very easy for the price to go and retest it, bring it back to equilibrium to get discounted prices. We're also seeing this golden zone of the Fibonacci retracement. So we just came back. That is the 61 retracement, and this is the 50% retracement. So we're sitting in the golden zone of the bigger 1 hour Fibonacci retracement. There you go, guys. So you had so much information on this video. I hope it's helped. Make sure you subscribe and share this video to anyone you think can find it useful to help them find consistency and potentially help them find the financial freedom. And who knows, come and live in Bali with me. We can have some social trading in Canggu or wherever you decide to move. Or if you're in Europe, I'll be returning to Europe. If any followers are from Greece, Italy, that's probably the places that we're going to be going back to. Give me a shout, and who knows, if we're in your town, might meet up in person. So let's see what happens, and I hope you have a good day trading, and I'll catch you later.
Run it.